All right, everyone, good evening. Today is Monday, November 16th, and let's walk through the market news of the day. To kick things off, as always, let's talk about equity markets. We see the S&P 500 up about 1.2% and the Dow up about 1.6%. This comes amid great news from Moderna. This is a similar story to what we had seen last Monday with Pfizer, again, also with an mRNA vaccine. Moving on, we see that the Dow actually has reached a record high and is nearing 30,000. Lockdown favorites such as Zoom video communications did slump on the news because obviously, if we are going back to the office and living life closer to normal, that will not be as good for companies that have done particularly well during this countercyclical movement. In addition, Moderna's vaccine led their own stock to rise about 10%, as it was shown to be 94.5% effective. Considering FX markets, the yen was up 0.1% to 104.5 per dollar. Offshore RMB was at 656.54 dollar. And dollar spot was down slightly, euro was up a bit, and the pound was up a tiny bit as well to 132.19. Back in the US, treasuries held just about steady. The 10-year was around 90 basis points, but in Australia, the 10-year was up 5 basis points to 93 basis points. WTI was up 0.2% to 41.40, and Chinese oil processing did rebound in October to match record highs. This comes amid consumption in Asia increasing dramatically. Gold also held steady at 18.90 an ounce, and European equities did rise as well. All right, talk about some stories. Got some big ones. A headline that came out this morning was PNC's acquisition of BBVA, the North American assets of the Spanish retail bank. This would create the United States' fifth largest retail bank, and PNC had long been seen as a possible buyer for these assets. This comes amid European banks being incredibly unsuccessful in their American ventures across firms like HSBC and the Royal Bank of Scotland selling out of Citizens Financial Group back in 2015. This deal was advised on by PNC, BAML City and Evercore on PNC's side, and JP Morgan advised BBVA. PNC had also been seen to be a likely consolidator of the very fragmented regional bank market here in the United States, because extending the bank's national presence could allow lots of cost synergies. So they do expect this deal to be 21% accretive to earnings by 2022. Transaction has an estimated IRR to PNC in excess of 19%. The purchase price is estimated, however, at 134% of BBVA's tangible book value and reflects a deposit premium of 3.7%. The acquisition adds about 86 billion US dollars of deposits and 66 billion dollars of loans. PNC also does expect to incur merger and integration costs of nearly $1 billion. However, this is inclusive of the 250 million in write-offs of the capitalized items. They also are likely to achieve cost savings in excess of 900 million, representing 35% of BBVA's USA 2022 estimated annual non-interest expense. Also important to note here is that PNC had just sold their stake in BlackRock earlier this year, so there had been lots of rumors of possible acquisition targets. PNC is now going to be, again, this fifth largest retail bank in the US and is uniquely positioned because big banks can't really garner enough regulatory support to be able to approach the next step and go through the merger process because of antitrust laws here in the US. However, a bank as small but still large like PNC can possibly do that. So this expands it from being a regional bank headquartered in Pittsburgh, where Carnegie Mellon is located, and does make it national, including a lot of assets in Florida. BBVA is Spain's second largest lender and does also have a lot of assets in Latin America. All right, moving on. Let's talk about Walmart in Japan. Walmart is going to sell most of Japan's Seiyu to Rakuten and KKR. KKR will be the majority owner of the supermarket chain. This is a storied, very famous and commonplace firm in Japan. The KKR partner, Yatagwa, noted that an IPO is a common goal and key exit strategy here. Walmart had been rumored to sell the chain for as much as 500 million yen in 2018. However, this deal will value the supermarket at 172.5 billion yen, which is the equivalent of 1.6 billion US dollars. So Walmart expects to recognize a non-cash loss of about 2 billion US dollars after taxes in the fiscal fourth quarter because of this transaction. They had invested in Seiyu back in 2002 and did take it private in 2008. Like other foreign retail giants, whether that's Tesco or Carrefour in France, they failed to be successful in Japan because of the competitive nature and really low margins. So they did struggle to compete with firms like Aeon Company and Seven & I Holdings Company. Both Carlyle and KKR have been expanding their businesses out in Japan, with Carlyle in March raising 258 billion yen, equivalent of 2.5 billion US dollars, for its fourth Japan buyout fund, and KKR has also been increasing its involvement in the country, declaring Japan in 2019 to be, quote unquote, one of the most interesting buyout opportunities in the world, and intends to complete somewhere between 300 and 700 billion yen of deals each year. This deal is expected to close in first quarter of 2021 and has been approved already by members of both boards. All right, moving on, keeping it international, let's talk about Nordnet. They're going to do an IPO in Stockholm on NASDAQ Stockholm. They plan to list as much as 10 billion kronas, or the equivalent of 1.1 billion US dollars, of shares on this exchange. This equates to 94 million shares at somewhere between 88 and 104 kronas apiece. So the stake represents 38% of the company and will start trading on November 25th, so the day before Thanksgiving here in the US. And so the shareholders that had been the largest before will continue to be the largest stakeholders once the company goes public. However, individuals tied to the chairman, Tom Dickensville, will also be very prominent in the now public organization. All right, moving on. Aramco, they have turned to bonds to help fund their 75 billion US dollars in annual dividend. This is one of their biggest selling points for investors and represents a huge commitment, especially amid the current oil price environment. We have WTI trading, as mentioned, at that $41 a barrel range, which again is because of this demand shock we've seen because of the coronavirus. We also have factors like the expansion of supply out of Libya that do contribute to the fall in oil prices. We've also had the OPEC price wars between Russia and Saudi Arabia. However, prices are low. They're likely to stay low for the foreseeable future, around this $40 to $50 range each barrel. So with that in mind, Aramco looks to finance itself with more debt. This does come amid them already having more gearing than their target range of 5 to 15%. They have completed efforts to conserve cash, and this includes cutting jobs, considering selling assets, and slashing spending across the board. Their measure of debt as a percentage of equity, the gearing as referenced before, has increased to 22%. And gearing also did rise because of the additional debt they assumed to pay for the 70 billion acquisition of Saudi Basic Industries Corp, which is a chemical maker, and they did this transaction earlier this year. The yield on Aramco's 3 billion of bonds due in 2029 has dropped to 209 basis points from 304 basis points at the start of the year. This is only slightly higher than the government equivalent securities, which does make sense because this is a state-owned enterprise. And Aramco's debut bond sale last year raised about $12 billion, which is where we see that 2029 series come into play. This was one of the world's most oversubscribed debt offerings in history, with more than 100 billion in investor orders. This new transaction would likely be a dollar deal with tranches for 3, 5, 10, 30, and 50 years, and may follow depending on investor demand. The company already did draw down on a $10 billion loan in July to plug this funding gap that they have seen again because of this drop in oil prices. Free cash flow for the first 9 months of the year was about 33.5 billion. So that is more than $20 billion short of what they would have needed to finance their dividend payments with their free cash flow. They did notably continue to pay their dividend this past quarter. All right, moving on, but staying in the region, let's talk about the Saudi PIF, the Public Investment Fund of Saudi Arabia, is making another splash, but this time they're rotating to investments at home. They were handed about 40 billion US dollars earlier this year to buy global stocks, but they will pour the same amount into the domestic economy this year and again in 2022. Their local investments could be funded by liquidating assets across the board. And the 347 billion sovereign investor is looking to grow assets to a whopping 1.9 trillion US dollars by 2021. And this does come as MBS, the leader of the kingdom, emphasizes the desire to achieve their 2030 plan. So they've got this big idea, Vision 2030, which entails a whole host of economic developments and does essentially compete with Abu Dhabi's very similar plan for 2030 as well. So this could be the deepest recession for the economy in Saudi Arabia, as they are the world's largest crude exporter and are obviously very exposed to this oil price risk. All right, one more thing to touch on. Tesla is going to be joining the S&P 500. They will do this next month, and it will be the largest ever new member of the index. The shares spiked in late trading, and the effective date will be December 21st. So right before Christmas, Elon Musk will get a nice present. And Tesla shares rose as much as 15% to 467 today in extended hours trading here in New York. The five-fold rally in the stock this year rose to 390 billion. And the announcement does cap months of speculation. If you remember, a couple months ago, there's a big scandal where other firms were added to the S&P 500, but Tesla was not. All right, see you Tuesday. In the meantime, just to touch on a couple events that we do see ahead, Brexit talks look set to continue as the UK and EU do approach the latest deadline for Boris Johnson's plan to exit the European Union. Also, if you do have a few minutes, do tune in to the Bloomberg New Economy Forum. This is virtual and has been airing on Bloomberg all day. So preeminent members of the global elite have been giving their opinions on the economic future of the world. They're discussing trade, political populism, climate change, and obviously the pandemic. This runs through November 19th. Also, the OPEC Plus Joint Ministerial is having a monitoring committee meeting on Tuesday, so we will probably have some notes to discuss on that with regard to oil prices tomorrow. We do also see U.S. retail sales on Tuesday and the Bank of Indonesia's rate decision on Thursday. With that in mind, have a great rest of your evening and look forward to connecting again tomorrow.